everyone, this is Evan from the Trade Risk here on Saturday, April 2nd with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then we'll leave you with a few trade ideas heading into next week. And as a quick reminder before we jump into things, I want to just point out, if you like the videos, do subscribe to this YouTube channel, bottom right-hand corner. All you have to do is click this link down here. It'll keep you up to date with all of the latest videos that I publish. And it also let me know that, people are interested in these videos, they like them, and I like to see that on my end. So if you haven't already, please do subscribe to the channel. If you have, thank you very much. Now, getting into the content and analysis for this week, bulls getting it done, up 1.87% in the S&P 500. That was coming off of this sort of sideways digestion week last week where we closed down just over 0.5% in the S&P 500. And of course, this has been a remarkable run off of these 180 lows. This market really has just not looked back. It hasn't given you, too much of a pullback, more so through time than anything. And it's just held above all of these fast-moving averages throughout the past 6 weeks or so. So let's look at the action a little bit closer here on the daily chart. We came into the week right here Monday, gapping up, basically flat though from Friday's close. We went sideways. And then Tuesday was the fireworks. We finally saw some volume come in. We finally saw some directional commitment here after moving sideways and just kind of very sleepy trading over the past 5 or 6 sessions. Tuesday changed that. The bulls took control, closed at the highs of this recent trend, and that set the tone certainly for the rest of the week. We did see the market cool off a bit here Wednesday and Thursday, just filled the gap. And again, more so through time, it wasn't any drastic pullback here. It was just 2 days of consolidation, very healthy action, technically behaving exactly what you would want to see here in a nice bull trend. And then Friday led way to a scary gap down on the open when things were looking pretty ugly. Maybe we finally saw that change of character. Maybe this was some sort of blow off, but we did not see that. That didn't happen. The sellers just disappeared, and this market was able to just rally higher, turning some very strongly negative bearish internal readings to more positive by the end of the day, and just engulfing the past prior 2 days, or at least Thursday, almost engulfing Wednesday as well. So a very constructive, very bullish looking end of the week here, closing near the highs, and just showing that there's still interest in this market, and we're seeing it across different sectors, and we'll talk more about that later. As far as levels on the upside, I have 208 loosely printed here. It's not a magic number, but it's a level that we did have some prior inflection points at in the past. And then of course, 212 or so is going to be the all-time highs. We're getting really close to them. Again, no predictions to say that we have to get there, but so far this grind higher just continues to keep in motion. Now, the more interesting indices this week, I think, are the NASDAQ and the small caps, but we'll look at the IWM first. The small cap index, you can see closing at the highs of the day, almost getting that bullish engulfing, not quite though, but still tremendous looking strength here. Everything looks good. Notice here though the open gap from the beginning of the year. The S&P 500 already closed its January 4th gap down. The small caps have not, and I do believe, especially given the close here, that we do that this market is sort of destined to close this maybe next week, maybe to kick off the week. I think we could see another push here to fill this gap. I just think it's going to happen at this point. So keep that in mind. Everything else here looks good. We're above 108, this 108 to 109 level that has been so important in the past. So we are recovering in V-shaped fashion, but again, we had plenty of time to get back involved in the IWM with this past 2 weeks of consolidation here. I mean, we went sideways here after topping out right around 108.50 or so it gave you time to get in here for potentially a second leg higher, which is what we're on the cusp of right now. So keep that in mind. I think the trend here still very clearly higher, and the Qs, similar situation. Again, this is a beautiful looking engulfing bar, just clearly taking out and engulfing the digestion here from Thursday and Wednesday. So you had this explosive move on Tuesday, really bullish bullish action here, small digestion, and then another bullish engulfing. It's just a great technical picture here in the Qs. And notice it has its open gap right here that it's basically it's into right now, trading inside of. And to fill that, you'd have to get all the way up to 111.84, which is almost two points higher here in the Qs. I think this will happen heading into next week. It just seems like everything's in motion too. So keep that in mind. You might have a little bit more to push here. Maybe once the Qs and the IWM fill those gaps, maybe that's finally what this market was sort of magnetized to on the upside, and we can start to retrace. But again, I think it's foolish to just keep trying to call points where we think this market's going to turn around. It just doesn't pay. It's just not smart until we actually see some of the price action confirm that. So everything looks good across these markets. Almost had the hat trick on the bullish engulfing indices here, but we missed it on the IWM by about a dime. So again, everything's still looking pretty favorable there. Now, getting into some other markets here, TLT will start there. Held in there on Friday, still constructive here out of this pattern, breaking above this trend line, holding support from 127. I think at best, you're range bound, but you're still in the context of an uptrend. So I think at worst you're range bound, but you're still at least trending higher here and using this as a support level to trade against 127.50. I think that's what you can do if you're bullish. Gold saw a sizable gap down actually on Friday, but you can see buyers did step in here, so there was some interest as it started to get closer to this 115 level or so, closed back above this support at 116. Again, I think these lows now from Friday are going to be very important. Let's see if gold can continue to get back above this trend line and start to work itself higher. But so far gold looks, it's at an interesting point, but there is showing some interest there. Silver, similar situation. Remember, we talked about this Wednesday, how congested and overlapping all this price action was, and we pointed out that this was not going to stay here. There was going to be a move happening very soon. It was to the downside, but similar to gold, you did see interest here. We closed near the highs. Buyers stepped in as it started to, get closer to this 14 level, so that does look promising. Perhaps we're building some type of larger range here in the metals, so, maybe something down here. So just keep an eye on it. There is certainly interest here as long as the bulls can hold on to the majority of these trends of this uptrend in gold and silver. I think it increases the probability of seeing some follow through maybe in a couple of weeks or so. If we look at USO, but the bulls could not hold this upper level support here right around 970 or so. We talked about this being an important level. We're back into perhaps just this larger range that is not so surprising after being in such a steep downtrend for multiple months, multiple years. It's just going to need some time. It's healthy to move sideways, let all of those longer term moving averages catch up, and then eventually work itself out either higher or lower. But for now, this looks in trouble. I would not want to be long USO until it gets back above at least 965. UNG is still hanging in there. Notice we talked about this trend line break here. It's still above there. That is constructive. A little sluggish here at the end of the week. I think as long as you're above 640 or so, or really if you want to use this pivot right around 630, then you can try and remain optimistic here as some type of higher low, as some type of higher consolidation from this trend higher from beginning of March to the middle of March. So as long as it can hold above here, I think it still has some merit to it that it could try and leg higher here. But again, just know it's a super beaten down chart on the longer term, so just be aware of that. We're still long this market, so maybe I have some upside bias there, but we're long UNG right now, looking for higher prices. Now, getting into some of the sector analysis, XLU just continues to trend higher. Nothing's changed here since February. In fact, we're still long this. We finally took some profits right at the end of the day here, right above 49.85 or so from our 45 entry. We have a little piece left. Still riding the trend. It looks great. XLP also looks great. All-time highs here. 2.5% up week in the staples. It's just very impressive. IYR as well. which I don't see many people talking about, but this is actually looking pretty damn actionable here, especially this breakout. Look at the monthly chart. Look what last month, look what March did here for the IYR, up 9% and taking out all of this prior resistance. That looks great, and that looks good for higher prices. So that's been working. It continues to work. For some new rotation here, XLV and IBB, the healthcare, the biotechs, starting to look a bit more promising here. Look at XLV at the top end of this resistance. Hasn't really been above 68 all year, and now it's trying to do that, particularly on Friday, as we saw this nice engulfing bar get put in here. So keep an eye on XLV, keep an eye on IBB. We had a post up on the trade risk last Thursday mentioning the IBB, talking about some of the setups we were seeing in our scans in these indices, in these markets, and it's looking like it's starting to work now. Price is starting to confirm that the actual averages and indices are actually catching up to some of that individual price action. So keep an eye on those two sectors, and I'd also say keep an eye on XLF. Because XLF, once again, this one too is pretty beaten up, and it's looking like, you know, you have some type of cup and handle sort of pattern here, rounded bottoms, whatever you want to call them, but looking relatively actionable, and I'm starting to see some of those financials in the scans as well, so keep an eye on that. Now, getting into some of the individual names real quick, we'll go through a couple of them. Apple, mostly the FANG stocks, because they've been actually acting pretty well, especially this week. Apple, we talked about, this was the 61.8% retracement from this leg down, 119 all the way down to 92, 61.8 coming in right here, this trend line coming in right here, prior supply coming in right here. A lot of reasons this market should stop right here, but it doesn't look like it wants to just yet. So keep an eye on this. Still looks good here, and we'll have to see if it can continue into next week. Google, also looking pretty good here. Broke out Tuesday, was this nice breakout bar here, taking out prior resistance, had a 2-day pullback, and then today back back above this prior resistance level right around 763 or so. We are long Google, looking for higher prices here, but this looks pretty good. Amazon, similar situation, had one of the best arguably of the FANG here recently, as it started to break above 580 or so. It's looked good, had a mild pullback, coming back right up to the $600 level, but Amazon still looks good. Facebook looks good as well. All-time, not quite. This was the all-time closing high Tuesday, but very close to it. Looks like this wants to continue as well. So all of those FANG stocks, which is probably what can help get the Qs here. They all look like they're in good formations. Probably get the Qs to fill this gap early next week. Finally, Tesla, let's talk about that. Obviously, we had its news out on the Model 3 sales, pre-sales. They were above expectations, I believe. I'm not really sure what people were expecting on it, but as far as price action goes, we took out the prior pivot high here from Monday the 21st. Barely closed above it, closed right at it. You could see the intraday action, maybe not so impressive. A semi kind of quasi sell the news event after running up so much. However, it's still held in there, up 3%. I know orders will continue to come in this weekend. Maybe we get another gap up. It's just the trend is certainly higher, and it's news driven right now. There's a bunch of catalysts, so it's in play, and it's probably going to move around quite a bit, but certainly still looks good. I think above 220 or so, that looks good. As long as it can stay above this recent consolidation around 225 or so, Tesla looks pretty good. Now, for some setups, I posted a lot here on the blog recently, so check it out there, especially some of the monthly setups. There's a lot of scans that are looking constructive here, but I'm going to just go over 3. HUM, this is a weekly time frame here. You can see this nice looking nice run up here for multiple years, healthy consolidation, very methodical, and now it's back to resistance. Looks like it wants to try and make a move here. It's not ready just yet, but keep an eye on 188 or so. Break above there. I think this longer term trend can continue. Next retail name, I mentioned this I believe the other day, BBBY, Bed Bath & Beyond. Getting pretty tight here. Retailers had a tough time on Friday, but I think One of the ones that stood out here was just this big tail. You can see there's some pent up, looks like there's some pent up demand here in BBY. Keep an eye on like this 50 level. If it can start to break above there, I think that's pretty actionable. And then if you want to try and stick in that theme of rotation into biotech, ICPT amongst many others, but this looks pretty primed here, holding up right up against this 130 level, above Friday's highs. This looks good for some higher prices. And that's it. That's what I have for the market recap. I hope you enjoyed the videos. As always, please do subscribe if you like them. Thanks for watching. I'll catch you next time.